this year hasn't been great for most altcoin investors. At least there are some people that make money. Here's Humanity token. It has tripled in the last week. The question is, how much longer can this really last? Let's have a look at some on-chain data, the data most people are not considering. We are currently at close to 21 cents. This is a chart. But once we zoom out a little bit and we have a look at the price development relative to the rest of the altcoin market, things don't look that shiny anymore. The Humanity token once lost 80% from top to bottom. That was in July and August. And then subsequently in October and November, it fell by 85%. So we can make the argument that the current rally is just another correction after a crash. There is a good reason to believe that Humanity at some point will come back down again, because here's the number of tokens circulating over time. Also known as Tokenomics, 1 year from now, we will have 4.7 billion H tokens. Currently, we are at 2.3, so we'll see the supply more than double. And the big question is, will the demand, the organic demand, double as well in 2026? That's a high bar to cross. I have my doubts that the current rally is organically driven. At least nobody is using the technology. This is the number of new addresses on the Humanity blockchain. It's a chart that shows the last 3 months. We've never seen more than 100 new addresses on a day. Most days now we see single-digit account creations. I think this chart shows the definition of a dead technology. Now, there are some holders on the Ethereum chain of the H token, 4,685 to be exact. And diving a bit deeper in the on-chain metrics, we actually see who's causing the recent rally. What we see here on the left, that's the number of retail investors. What we see on the right, that's the number of whale investors. Again, that's on the Ethereum chain. The way we make this distinction is by looking at minimum holding thresholds. How many tokens are held in a particular wallet? To be counted for the chart on the left, a wallet has to hold at least 4,000 H tokens. That's roughly $1,000 worth of the token. In the middle, that's $10,000 worth of the token. On the right, it's $100,000 worth of the token. So the number of whales went up from 46 to 77. So 31 new wallets with 100K minimum. And the other wallet cohorts did not grow that much, relatively speaking. By the way, if this is not your very first time watching this channel, then feel free to subscribe over here. I publish videos regularly, and when you're subscribed, YouTube is more likely to recommend the videos of this channel again. And so it's those big wallets that are causing the rally, at least partially. How much upside potential do we have? Let's compare the market cap with other privacy-focused blockchains. So let's work with the scenario that we will suddenly see adoption of the technology. The market cap is currently at 375 million. Canton, the largest asset listed here on CoinGecko under privacy blockchains, has 3.3 billion in market cap. So in theory, we could almost see a 10x in the Humanity token, so $2 per token. Will that happen though? Most trading volume actually does not happen on the spot market. We've got 50 million in the last 24 hours on BitHump. Have a look at the perpetual futures. Here we had 377 million. So really on Binance, on the perpetual futures, that's where price discovery happens. The funding rates are somewhat balanced now. Liquidations tend to be in both directions relatively balanced. Trading volume is elevated with the recent rally, and open interest has also come up again. We have seen higher levels. We have seen 250 million worth of bets on the price. Now we are roughly at half of that. But the price of Humanity definitely goes in line with the amount of bets on the price. So the more bets, the more speculation there is, the higher the price is. Once speculation dies down again, once there is less open interest, then Humanity might come back down again. But currently the momentum is positive. There is a reason to be short-term bullish on Humanity. The smart money is buying into the token, but there's also quite a bit of leverage. And the problem is that especially long-term, since the supply will double in the next year, very likely Humanity will underperform over the course of the next months. What's going to happen in the next days and the next weeks is up to the whales. What's going to happen over the very long term is rather clear, because again, the project doesn't really have any usage. It's all just player versus player trading. The token is almost treated like a meme coin, a token that doesn't have any inherent value in itself. It's just trading of current momentum. Now let's look back. In 2025, the average Bitcoin investor pretty much got nothing. There were no gains, there were no losses, went slightly down by 8% roughly. The average altcoin investor, however, suffered much more. This is the performance of smaller altcoins in the last year. Many of them are down 70, 80 or even more than 90%. And that's really why sentiment is so bearish. It's most people owning many different altcoins, having a diversified portfolio of alts, and then underperforming massively, while other risk-on investments are actually doing fine. The Nasdaq 100, for example, appreciated this year. The problem really is that those smaller altcoins get hyped by influencers. YouTubers say that you should buy this small altcoin or that small altcoin. You're taking on much more risk than you should. And then in the end, you end up losing 50, 60, 70, maybe even 80% in the span of just a single year. If you used leverage, you probably already lost everything. This is the others market cap. And there was the flash crash on October 10th, where the average altcoin fell by 48%. So if you had leverage above 2x on any altcoin, you lost it all. And this was all just due to mispricing, right? We went back up quite quickly again. Those purchases, of course, had not been made by the average Joe. This was algorithmic trading. And now those algos are selling off their allocation over time as well. Many projects went from the billions of dollars, Bonk for example, to just a few hundred millions. 4 billion down to 600 million. Or here, SPX 6900 from 2 billion down to 400 million. Or over here, Fartcoin also above 2 billion. Now just slightly above 200 million, a drop of 90%. Or here, Dog with Head, 4 billion down to 300 million, a drop of more than 90%. Now, interestingly enough, you are still watching crypto content, so hopefully you haven't lost everything. But if you're just in Bitcoin and you have lost maybe 8% this year, that's not ideal either. It makes sense to change approaches, to not try to find the next 10 or 100x altcoin, because this is not the market to try to make those gains. Currently, the attention on crypto is very low, and it does need a lot of attention for those smaller altcoins to rally. This is not the time to buy those very risky bets. It's better just to focus on long-term compounding. Now, how many of those other YouTubers that you're following in crypto is actually willing to share their own data, their own performance data over time, since maybe starting to trade? I actually do not know a single one, but feel free to comment down below. I am willing to share my data though. This is my trading portfolio over time. This is a monthly chart, and this is going up for two reasons. It's going up because I regularly dollar cost average into that portfolio, but it's also going up because it outperforms just buying and holding Bitcoin. This year I did make money. So have a look at this. This is the monthly performance versus Bitcoin over the same time period. Every dot here represents how much I did better or worse compared to Bitcoin in that specific month. And what we see here as a dotted line, that's the 12-month moving average. Now, the overall average of all of those dots, that's 1.9%. So over the last 50 months, I have on average outperformed Bitcoin by 1.9% per month. Now, I don't just show this in order to brag. Of course, I do want to show my credentials here, but on the other hand, I also want to show how much volatility there is. There are some months where we underperform Bitcoin. There are other months where we outperform. The long-term average is what matters, and that's realistic. 1.9% per month is definitely achievable. The 10x or the 100x might be achievable with one position during a bull market with a specific lucky bet, but it's definitely not realistic long-term for an entire portfolio. And I don't just want to share my own performance. I also then started in July of 2025 a 5-month copy trading beta test. So every annual member of premium of this channel was able to deposit into that pool, and whatever trade I made was automatically reflected in the portfolio of the members. Now, this was a very actively managed project, and so here the outperformance versus Bitcoin is more than just 1.9% per month. But that's what diversification gives us, right? It gives us a bit more stability, but also muted returns. But here's where I think I'm different to all of those other influencers that only talk, but that don't really show their data, that don't really prove themselves in the market. If all of those influencers are so successful and they make those 10x returns so regularly, why don't they just open a similar kind of copy trading pool and then take a cut of the gains? The reason why they don't do this is because they don't outperform. They simply just make content on YouTube and then get some advertising money by YouTube or potentially even by individual crypto projects, right? Very often when those small altcoins get promoted, it's just because the influencer got a kickback from the project. By the way, I never took any money from any crypto project ever. I only have the premium membership of this channel. I have the affiliate link for Ledger. I've got the affiliate link for TradingView, so those are two tools, and I've got an affiliate link for Hyperliquid. That's a platform that I use myself where you can reduce your trading fees. But I've never taken any money from any project in order to promote that token. And so if you want to turn things around, if you want to start getting your money back again, you probably have to also follow a different approach. Now, I'm not a magician. I cannot see the future. This is not how I make this outperformance. I simply just write the market structure. And the market structure for many altcoins is very disadvantageous for most retail investors. Very often the supply of an altcoin tends to grow over time. This here is the example of WorldCoin. But very often the demand doesn't grow as quickly as the supply. And that leads to underperformance. Every single week we've got roughly 700 million worth of unlocks. Bitcoin, on the other hand, has only 284 million worth of unlocks. So the altcoin market has unlocks that are roughly double the size of Bitcoin. Yet a Bitcoin is more than 9 times larger in market cap compared to the altcoins. So we are looking at roughly 20 times the selling pressure relative to the market cap for the average altcoin relative to Bitcoin. This is why things like WorldCoin over time go down versus Bitcoin. That's why we see charts like this. This is WorldCoin relative to BTC. And so my approach is not trying to find the outlier here. When everything goes down that much because the early investors and the insiders sell, then I want to get part of that money as well. I am flipping this chart around and then it looks like this. This is Bitcoin relative to WorldCoin. There's a way to get exactly that performance. Had you opened that position at the beginning of the year and you just held it until the end of the year, you would have made more than 300% return. Now this is of course a positive example and there is a lot of volatility in here as well and there are ways to get stopped out. That's why I'm showing the actual realistic returns that are achievable, that I've achieved for the premium copy trading vault. And that's why I also share my alpha over Bitcoin for the entire crypto portfolio. 1.9% per month is realistic, but the right position can go up quite a bit. More than 300%. So there's really no need to try to find the next 10x meme coin. I have made several tutorials on this approach, how to set up the trades, how to do proper risk management, etc. And of course, I'm sharing my own trades as well. For example, over here, this is November 24th, where I entered a short on Pudgy Penguins. So I want to bet on relative valuations. We want to bet on one altcoin doing worse compared to another altcoin that might have high correlation to that alt. But more of the theory, of course, is explained in the videos. And so that's truly how I believe things can be turned around. It's not following the same kind of recipe, the recipe of disaster, but it's instead following the market structure. The odds are stacked against the regular retail investor that just buys an altcoin. Don't be like the average Joe. You want to have an edge in the market. So here's the premium membership. It's currently $125 per month. If you want to be part of the next copy trading pool and you simply just want to deposit your money and set and forget and I then trade for you, then you might consider the annual membership. Those 17% were achieved over 5 months. If we annualize this, that's more than 40% after fees. So the break-even point is somewhere at around $3,000. That's for annual, if of course the prior returns will persist. That's a big if. Nobody knows if we can keep the performance. But again, I do think that we've got the odds on our side. If it's the first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.